Hello everyone. Hope everyone's having a great weekend. For the weekly Sunday stream, we're going to jump into Bitcoin as always. And as promised, we're going to go ahead and zoom out a little bit on this stream before we zoom in on the lower time frames. So let's go ahead and jump right into it. So we're mainly following two ideas on the higher time frame. We're following a bullish count and a bearish count. Let's just take a look at the bearish count here quickly. So from the bearish perspective, we're saying that this is not the cycle bottom for this cycle one. And this is just an A wave. And internally, we have an A, B, C. Timing-wise, everything is still pretty much on track with our expectations for a intermediate correction, because this is an intermediate A, that's an intermediate B, and this is an intermediate C. And then encompassing that is the primary degree, the wave B, which timing-wise, it falls within our expectations for a primary degree as well. We want to see at least a year for a primary degree. The only thing that's concerning at this point is the strength of this proposed C wave. When we take in consideration this larger degree, the primary degree, we're pretty much at the 786 for that B wave. Meaning anything beyond this, and it's very improbable that it is a B wave. Usually B waves don't go beyond this unless it is a flat. Now, I can still get this as a impulse for a C leg. And the way that I've done this actually, instead of seeing it as more of a forced way, it does make a little more sense here when I think about it. So jumping into this here, I've had to rethink this leg up. Nothing's changed here. We still have a shallow correction there. But the way I'm seeing this is more as an extended 1, then a 2, a moderate 3, then a 4, and then an ending diagonal. The 5 is less in strength than the 3, and the 3 is less in strength than the 1. So it's a valid impulse. Now, when we talk about alternation, there's great alternation here as well. Because here's a shallow wave 2 correction, and then a sharp wave 4 correction. And they are similar in time as well. So just measuring these out in time and comparing them together, they are similar in time. And once again, great alternation. Shallow correction or a sharp correction. Now it's really about managing the structure of this fifth wave. We'll dive into the short-term time frame very shortly, where this fifth wave actually could already be done, or we still have one more leg up. It's not for certain at this time, but we'll discuss those variations very shortly. So we can't rule out this count yet at this time, personally. It's still valid, which is something that we always fall back to, which is validity. It may not be the most probable due to the strength of it, how it's exceeding the 786, but it's still valid. Now, instead of being bearish, we also have bullish perspectives. The first way that I can see this is pretty much the same way that we've been discussing since the last stream. It's just a little bit different here at this time. So in the last stream, we were seeing this intermediate wave 3 as being here. However, due to the impulsive nature of this leg, once again, I've had to rethink the way that I'm viewing this leg up. And it's counted the exact same way that we just viewed. Once again, here's our shallow correction. There's our sharp correction. And we're still making one more leg up. We did meet the minimum expectations for that wave 3, potentially, that we were looking at a few months ago. Because it did hit the 1618, minimum expectations. Once again, as time has developed and we've had more price action, I've had to rethink this leg. Now, I still think it's still part of the same structure, meaning a 1, 2, 3, 4, and a 5. Once again, it's just a matter of managing expectations for this leg right here. Ultimately, I want to see some type of rejection right here at this 175, 1786. But it really could expand right up there to the 2.0 as well. After completion of this impulse, this 1, 2, 3, 4, 5, we're looking for another A, B, C correction. This correction is going to be of a minor degree. And with alternation, we want to see it be a sharp correction. And this does have a good narrative to it too, because back to back we have 2 shallow corrections. Here's our shallow flat, and then another shallow flat, and then we actually had a sharp zigzag, and we're going to want the same thing here, a sharp zigzag. Ultimately, I do see us targeting this low. I want to see it at least hit the typical wave 4 targets right there. But it really could be still a shallow wave 4 where we only hit the 236 to the 272. That's still on the table. It could still be a sharp correction, but just really have not enough strength to go down to 3414 or 382 and really only hit this zone. However, I would like it to take this liquidity before moving back up. That's something that I would like to see. We also want to see it be at least 2 months in time, because we're talking about a intermediate correction right here. Once this intermediate wave 3 is done, we're going to be in an intermediate wave 4. And these intermediate degrees are at least a few months, meaning at least 2 months. We do want to see it similar in time to the prior one, so if it goes up to 4 months, that's great. That'd be good, similar 1-to-1 in time. But I'm prepared for this to be a quick correction, because it may be a sharp correction, which they are quick. Alternatively, instead of this being one structure of itself, this could be a nesting structure. It could be an extension brewing, a 1-2-1-2. There's a few ways that we can see this. Nothing's really changed about this perspective. Last time we looked at this, we could see this as being the ending pivot, or we could actually see this being the ending pivot, which is being shown right here. Time-wise, these are both shorter in time than the prior wave 1. So they're very valid. It's really just about managing structure and expectations. If this really was a wave 1 pivot, and if this really is a wave 2 pivot right here, then we want to see this be another wave 1 pivot, and then another 2. What this means is we want this low to be protected. So we come up for one more impulse, then a retrace, an ABC retrace, or a wave 2. Meaning we want this low to be protected. Same thing for this perspective. If we are building another leg up of a minute degree, and then we're looking for a wave 2, we're going to get that one more push up, then we're looking for the ABC retrace. And we want this low, once again, to be protected. If price does come down and take these lows, then it's more likely that we are actually in the prior variation that we were discussing, the wave 3. Because this low is pretty much our target here for this wave 4. So to me, taking this low would invalidate this 1-2-1-2 here for me. You may be able to force it if you want to say this is a 1, 2, 3, 4, 5, just like how we were doing with the other counts. That's still possible as well right there. I just think the more that we stretch out this impulse, the less probable it is. That's why I'm very wary of forcing it like this, even though it does have a good narrative to it, once again, because of the shallow correction here and the sharp correction here. Let's go ahead and jump into the medium-term time frame right here. Let's go to the hourly. There's basically two ideas that we're following here on the medium-term time frame. The first one is a flat pattern. I think this is pretty, I wouldn't say extremely improbable at this point, but yeah, I do think it's getting up there. It's fairly stretched because of the strength of the C wave and the timing of the C wave. Although we are within expectations for a B flat, the way that we're consolidating here at the highs, it's not reminiscent of a impulse brewing. Even though we do have a potential diagonal structure forming right here, we would really have to push down for this 3, unless this is just a 1, 2, 3, 4, 5 of its own. Then we retrace for a 2, then come down for a 3. But the more we build out that structure, the more extended in time this is getting. So if we take this high, which is still on the table, I'm gonna probably invalidate this count because of, once again, the timing and the strength of this C wave, and considering what we have to go through to build out this structure. I do think it's less probable at this point. The other idea that we're following is basically this being a pivot here, and we're starting an impulse up. 1, 2, 3, 4, 5. However, now that we've changed our counts, how we're viewing the structure from the top, this could be a 4 now. So instead of this being a 2, it could be a 4. Nothing's changed here from our perspective. We hit our wave 3 target right there. We hit our wave 3 targets right here. Now it's about managing this correction. If this correction is done, or if it's completed right here, which I'll discuss here in just a few moments. Timing wise, everything's falling in line with what we expected. We wanted this to minimally be at least 3 weeks, and we were looking for a month. We are pretty much right at a month right now. Yes, we can go just a little bit longer, but this was our expectations. We want it to be at least 3 weeks to a month. Now, anything over, we're going to manage expectations now. But we know that we're ending the end of this structure. That's what helps us understand when these structures are going to be completing or nearing completion, is wave degree. Once we finish this impulse, if we still have one more leg up, once again, there's our ABC retrace that we're looking for. However, if this is a 4, and this actually is a fifth of a fifth, this actually still could be a 1, and then a 2, into a 3. And this helps us because this is wave degree confluence, meaning this is a high probability trade, this is a high probability trade because it's an A or a 1, this is a high probability trade because it's a B or 2, and then this is going to be a high probability trade because it's a C or 3. Directional confluence is very, very strong when the overarching structures are lining together. So timing wise, to us, it's indicating this is nearing completion. Let's go ahead and jump into the micro term time frame right here. There's been a few ways that we're seeing this. Just to recap, actually. So last time we looked at this, there's basically 4 ways that we could see this structure brewing out. Primarily, we were looking at the wave 4 not being done, and we were looking as a flat or WXY. Meaning we were looking at this as an A, we were looking to take this high for B wave, and then take this low for C wave. That was our primary expectations. Secondarily, we were saying that this could be completed. This wave 4 could have already been completed. Alternatively, we could have been consolidating and correcting into a triangle. Lastly, it could have been a diagonal, which we discussed was being improbable. As time developed, we got that A, B, C correction to take the highs for a flat. Now is about managing expectations for taking that low for the flat. Alternatively, since we still didn't take this low, this still could have been brewing for another impulse up for a 5th wave, or that wave 4 is already done. Lastly, it still was not ruled out for a triangle. However, what was ruled out was the diagonal, which was pretty improbable. We were leading hints that it was very, very improbable, but it was still valid at that time. Then as time developed even further, we did actually take this low, but the way that we were correcting, we were looking for a potential ending diagonal. And since we still couldn't rule out this triangle, it was still on the table. Now that we have actually taken this low, we can't say the triangle is valid anymore. So that really leaves us with the flat that we were pretty much monitoring as a primary variation. However, once again, as I was hinting before, this could be completed here. And there's basically only one way that I can see that. We would have to say it was a ending diagonal, where we took the high, and it was still a valid structure. That's the only way we can see this being completed, and we're finally working on that A, B, C retrace that we've been talking about. However, we still can't rule out that this wave 5 is not completed, and we're still working on the wave 4. There's our A, there's our B, and then here's our ending diagonal C wave. We still can't rule this out. The only thing that's improbable about this is the timing of it. Because when we take in consideration the timing of this wave 2 right here, obviously it has greatly exceeded that timing. Almost 4 or 6 times, potentially 8 times. Now, this is something that I'm really just monitoring here if we just happen to start digging down. Because once again, there is potential that we could move our intermediate wave 3 up here. And we start doing a sharp zigzag down for a intermediate wave 4 for the next 2 to 4 months. So I'm really just keeping this just as kind of a reminder to be aware of that. But I'm mainly focusing on these two variations right here. Either the wave 4 is not in, or the wave 4 is in, and we're doing the ABC moderate correction. So these are my primary expectations right here. That's everything I've got for today. I hope everyone enjoyed the stream. As always, if you did enjoy it, please like, leave a comment, and consider subscribing. If you would like to see all these lower term time frame updates that we do in the Discord, and we actively discuss this within Discord daily as well, feel free to pop by, consider joining. We're very vocal, we share ideas all the time, and we focus on other assets as well other than crypto. But as always, I hope you guys enjoy it. Thank you for joining, and hope you enjoy the rest of your weekend. I'll catch everyone later.